Baby boomers bought up many of the big homes across the U.S. when they were raising their families, that according to a recent New York Times article. But now they're staying put. Even all their kids are grown up. Baby boomers are at the top of the hill when it comes to the housing market, with tight inventory and higher interest rates and steep prices, making home ownership less affordable for the average family today. In fact, many of those older homeowners have paid off their mortgages on properties that have appreciated tremendously in value. And some are actually happy with their large home. But others would like to downsize, but they're being put off by the same high costs that are putting others on the sidelines of purchasing a home, especially for those on the lower rungs of the housing economy. Many are working longer or planning on an active retirement, and boomers are in no rush to move to a retirement community. About 28% of all U.S. homes with 3 bedrooms or more are owned by people between the ages of 60 and 78, living by themselves or with another adult, according to Redfin analysis of 2022 census data. Millennials living with children own just 14% of these larger homes. A recent Fannie Mae survey found that most Americans 60 and older do not intend to ever move. Just a decade earlier, 10 years ago, empty nesters in the silent generation, at that time they were between 67 and 84, they only owned 16% of homes with 3 or more bedrooms. Meanwhile, members of Generation X with kids who are 32 to 47 10 years ago own 19% of those larger properties. Redfin also notes that boomers own half of the $32 trillion in home equity across the U.S., and that's according to U.S. Federal Reserve data. Now, for years, some have predicted that the baby boomer generation would begin selling off their large homes en masse, and that would flood the market with inventory and push home prices down. Instead, many are not budging, similar to younger homeowners who don't want to give up their low-rate mortgages they got during the pandemic. Now, hanging on to their properties has helped these baby boomers accumulate a level of wealth that's greater than any other living generation. The median prices of existing single-family homes have increased more than tenfold since the early 1970s. That's when the oldest baby boomers were buying their first homes. And even though families have struggled with inflation, U.S. household wealth has actually increased in recent years. That thanks to massive government stimulus measures during the COVID-19 pandemic and a still hot jobs market. Boomers had a median net worth as defined as assets, such as homes minus liabilities of mortgages, of nearly $411,000 as of 2022. That was higher than any other cohort or age group. Nearly 80% of baby boomers own their property, and about a quarter own an investment property as well, according to the St. Louis Fed. Many just don't see a better alternative to leaving their big home. Smaller properties that have amenities that may appeal to the older generation, such as having no stairway or close proximity to services used by older Americans, are scarce in most areas, according to Jennifer Malinsky, Director of Housing and Aging Society Program at Harvard's Joint Center for Housing Studies. And one of our own made it into AARP's most recent blog post discussing the impact of interest rates on reverse mortgage payouts. All of you watching know that they are in fact less. It says in part that Bruce Simmons helps prospective applicants understand how reverse mortgages work and says he has the even temper that comes with 20 years of patiently explaining such a complex topic. And Simmons has been fielding even more questions than usual lately about the intricacies of what AARP says is a complex financial instrument. And that's because of a new complication: increasing interest rates. It has caused some anxiety among a lot of people who are new retirees or want to retire, says Simmons, just as they are for homeowners or would-be homeowners with a conventional mortgage. Higher interest rates are bad news for those who are considering a reverse mortgage. We know that it reduces the principal limit factor, but not entirely and not necessarily in the ways that they might think, says Simmons. Simmons is a reverse mortgage specialist at American Liberty Mortgage in Denver, Colorado. And he adds, there are so many people who can benefit from this today, even with the rates the way that they are. As interest rates rise, the loan balance increases at a faster pace, says Simmons. So we're going to lend them less money to begin with. Now, Just 2 years ago, Simmons points out that homeowners may have received a reverse mortgage that gave them 50% of their home's value, but now they may only get 35%. For example, Simmons says the owners of a home valued at $500,000 might have once been able to get about $250,000 from their reverse mortgage proceeds, but now they'd be limited to $175,000. Interest rates have ballooned from near zero to between 5.25% and 5.5% as the Federal Reserve is trying to curb inflation, and that's a 23-year high. The Fed has now increased interest rates 11 times since March 2022. Interest rates on 30-year fixed-rate mortgages today are hovering around 6.8%, and reverse mortgages often have a rate that may be even higher. It's safe to say reverse mortgages have a reputation of being sometimes very fee-laden, says Bruce McClary, Senior Vice President at the National Foundation for Credit Counseling. That agency does provide HECM counseling. Now, whether a reverse mortgage remains a good idea depends on an individual's capacity to borrow, the reasons for them borrowing, and what they're going to use that money for, says McClary. The answers will be different depending on people's financial circumstances and their goals. One MarketWatch reader wrote that her 75-year-old mother-in-law can no longer keep up with her bills, much less the payments on her existing mortgage and home equity line of credit. While her mother-in-law and her husband both do have Social Security benefits, and he also has a pension, today the wife can barely manage her mortgage and living expenses. The daughter-in-law writes to MarketWatch, "I'm running out of options." And she certainly is. But her hands are being somewhat tied by the couple's children. They will not even consider a reverse mortgage. Now, this situation, like most, is unique. The mother-in-law inherited a farmland, and she kept that property, but placed it into a trust with her sons as named beneficiaries. In addition, the father-in-law has signed over his pension payouts to his daughter so she can manage his cost of living in an assisted living facility. He even quitclaimed the home that his wife lives in today to their children. So basically, the adult children are holding most of their parents' assets, and mom is still struggling to meet her basic living expenses. The daughter-in-law is running out of options. The question is, are the adult children helping their mom today? Who knows? MarketWatch's Quentin Fertrell responds that her mother-in-law and her children can't have their cake and eat it too. Right now, they're in a stalemate, and no action is not the way forward. And he adds that her mother-in-law's home is just more than an asset. It's giving her a sense of security. Of course, he writes a reverse mortgage could solve the cash crunch that she's experiencing, but she may not want to have the bank own more of her home. I believe the columnist is referring to an increasing loan balance because she's made payments for probably over 30 years. So how could such a quandary be solved? Perhaps a piece of paper would help. The columnist writes, "It may help to visualize all of her choices on a single sheet of paper, with her assets, such as her home and land, pictured on one side of the page, her income in the middle, and her expenses on the other side. I'm a big believer in putting things down on paper where you can see them and add a timeline. It can give much-needed perspective, helps avoid obsessive thinking, and provides a reference point. Finally, tell her she doesn't have to make a decision right away. You may see assets to be liquidated on that page, but to her, she will see her entire life." And that last line should stick with us. Potential reverse mortgage borrowers don't necessarily see their home as an asset, but as part of their lifetime and identity. Now, what are some similar stories that you've seen from adult children? Please share your experiences in the comment section below. And that's a wrap for us here at HECMWorld Weekly. Thank you for joining us. We also have an audio companion to this podcast, which you can find on Apple Music, Spotify, and Podbean. If you'd like, you can subscribe to our YouTube channel and hit the notification bell. Thank you so much for joining us, and be sure to return next week for the only weekly podcast that brings reverse mortgage news to the mortgage professional.